You're listening to Smart Moves with your hosts, Ann Riley Caldwell and Matt Wilson.
Hey, welcome to the Smart Moves podcast. We are here to help you make smart and smooth and amazing decisions when it comes to real estate, mortgages, and sometimes life advice, but especially real estate and mortgages here in the Middle Tennessee area. I'm Ann Riley Caldwell, not your ordinary agent, and I'm here as always with my awesome co-host Matt Wilson, branch manager, loan officer for New American Funding. And today we have, of course, a new topic. We are going to talk about VA loans. So it's going to be VA loans made simple. So on May 1st, 2026, there are going to be some VA loan appraisal changes. And so we've got those. And we also, as always, have smart advice for veteran buyers out there. VA loans are still one of the best home loans out there, but a lot of people misunderstand them and misunderstand exactly how they work and how good they often can be. So today we're going to break down the VA appraisal changes, the biggest VA loan myths, and what veteran buyers need to know right now, and also how sellers should look at VA loans, because it's not always the right way that they look at them. So we're going to assume real quick to start off that you guys know something about VA loans, and then we're going to circle back around and talk about them more. But because we like to bring you the latest and greatest hot news that you may be hearing out there on the internet and or news, etc., there are some changes coming May 1st, 2026 to VA appraisals. So Matt's going to give us a quick update on those, and then we're going to go from there.
Well, first off, Ann Riley, it is bold of you to assume that I can give good advice when my face looks like this after the shaving accident that I had last night. So, don't.
We're here to make sure that our viewers do not have accidents, including maybe shaving. Matt can give us some tips.
Pro tip there, make sure you got the right guard on your clippers before you go to town, because if not, you're going to wind up with the choice between a Fu Manchu, a regular mustache, or the lamb chop look. So, anyway, here we are with this one. We get what we get today, okay? So back to the VA.
We're starting out with life advice before we get to real estate.
Yeah, I just figured we should address the elephant in the room. Hey, why is Matt significantly uglier today? I can see his face this time. Anyway, as far as VA appraisals go, or VA updates go, the biggest thing now is on the appraisal front. You know, in the past, VA kind of had a reputation for being the most irritating when it came to the property condition. And there were a lot of reasons for that, but one of the biggest ones was even on a detached shed or something, you know, that a shop or anything, a mini barn even, peeling paint counted as a health and safety concern, historically speaking, on a VA loan. You know, I guess you could argue that somebody's dog or my children would probably eat paint off the side of a barn, so I guess in that sense it's a safety issue, but it is a little bit nanny-ish in nature. You know, it's a little bit of an overstep in my opinion. So they've at least done something here recently to roll it back, starting next month, May 1st, 2026. If you're watching this sometime in the future, they're going to be changing it up where, for example, if it's built after 1978, which is when lead-based paint went out the window, then you don't have to worry about peeling paint on barns and sheds and things like that anymore. That's the biggest change that I've seen out there. And, you know, it's going to also make things a little bit less stringent on fireplace certifications and builder radon documents and stuff like that. You may want to still have your own inspections done for that, but the VA is not going to be guiding it so much. The thing I always tell people about VA loans and these appraisals is, like, you're talking about virtually the same people from the same organization that told us, I was a veteran. They told us whenever we were living in the dorms in the Air Force, we weren't allowed to have a toaster oven or a toaster because it was too dangerous for us. Meanwhile, they were teaching us how to work on things that were built to explode. So you tell me how that works out. Like, it's whatever. That's kind of a thing to consider whenever you think through the fact that they made you paint a mini barn before you got to move into the house. So it is going to make things a little bit smoother, I think, for a lot of people. It just common sense things are finally taking over to a certain extent here.
Yeah, because sometimes when it comes to those types of things, when I'm out showing houses to people or even determining whether to even go look at a house, those are some of the things that I'm looking at because, if a house is not in a certain condition, and I mean, there's still some requirements there, but this will make it a little bit easier to actually either make it worthwhile to go see a home that we might otherwise not go see at all, or, just have to figure out how to deal with it, whether the seller's going to take care of it or the buyer's just going to deal with it after closing, but at least we can get it to closing, which is always what we're all trying to do. And then a quick note, a home inspection, which Matt talked about, there is a big difference between home inspections and appraisals. We won't go into all of them now. We've got some podcasts where we talk about that, but whether or not you want to have a home inspection done is totally up to you as a buyer. I mean, I never encourage anybody to waive a home inspection, even on new construction, but some buyers choose to do that. When we got into multiple offer situations a few years ago, when there were 20 to 50 offers on a house, one of the things that people tried to do for leverage was waive a home inspection. That's not obviously the market that we're in right now. Some people still decide to save the $400 or $500, especially on new construction. So that's a conversation that I have with buyers. But on the home inspection, you're sending out home inspector and, maybe other inspectors, HVAC, roofing, whatever, and getting information back. And then we're deciding whether or not there's anything that you want to negotiate. So that's different because an appraiser is a different third party that the lender is going to send out to actually determine the value of the home that you're buying. And then when that appraiser was out at the home, sometimes they would check appliances, they would check for peeling paint, they check for certain health and safety. And sometimes when that appraisal comes back, whether or not, hopefully it showed up on the home inspection, but maybe we were just hoping that the appraiser wouldn't say anything because sometimes they don't. Sometimes the appraiser comes back and says that certain things have to be fixed prior to closing or there won't be a closing. So that's kind of the differentiation there, I think, between home inspections and appraisals. Did I miss anything?
No, I mean, that's a question that people ask me all the time. They're like, I thought that I was getting an inspection or I thought I was getting an appraisal, and doesn't that cover for the other? Well, the thing I always tell them is the inspection's for you, the appraisal's for me. Ultimately, that's the goal there. Another thing, pro tip here. Don't show your mortgage guy at the inspection. For the love of all things, do not show your mortgage guy the home inspection. Nothing good comes out of it. I don't want to know. I promise you, if for some reason you're watching this podcast, we're not working together, your mortgage guy, I don't want to know that either. Just keep that to yourself.
Yeah, they don't want to see, well, none of us want to see the report. Well, the buyer's agent can see the report, but the listing agent should not want to see the report. The lender should not want to see the report. And also, as the buyer's agent or their transaction coordinator are sending documents to the lender, they should not be sending amendments, repair amendments, anything that says repair on it. Just don't send it. Otherwise, if it makes its way to the underwriter, we're going to have some problems.
Yes.
Not trying to hide anything. Like, obviously if there's something huge, the appraiser's going to know about it or the deal's probably going to fall apart and never make it past a certain point anyway. So it's all legit, the advice that we're giving you. There's just reasons for it.
Yeah. Yeah. But not on my deal, but on one that I knew about with another lender. For some reason, the buyer decided to take it up on himself to go around the agents involved and send the home inspection to his processor. And his process from there on was very painful. I know that for sure.
Yeah, so there you go. We're trying to help you avoid pain. But anyway, so let's circle back now that we jumped right into VA appraisals because of the timeliness of it. Tell us a little bit about what a VA loan is and who can qualify for one.
Yeah, so VA, just like any other loan that sounds like alphabet soup, FHA, USDA, whatever, VA is there. It's government backed to give you the opportunity, in this case specifically for veterans, to purchase a home with either lower credit or lower down payment or, potentially slightly better interest rates too in a lot of cases. The whole point behind it is it's another benefit that veterans get for serving the country. It's a great product. It's something that I've personally done. I've got a VA loan on my own home right now. The big thing with those is it gives you the opportunity. You don't have to put down money. You can put down money, but it gives you the opportunity to not have to. And you can do that without paying mortgage insurance every month. In most cases, if you don't put down 20%, you're paying mortgage insurance every month. So it can be a pretty significant cost savings. In my personal situation, because I didn't have to put down money, I use that money to pay off other things instead of putting it down on the house so that it changed my payment minimally.
And how's a VA loan different from a conventional loan?
Well, there's a lot of ways it's different, and we'll probably lose everybody if we go into all of them. The biggest thing is just the fact that it's government backed. And you have to be a veteran to use it, obviously. Now, there are some exceptions to that. If you're like the surviving spouse of a veteran that's got a service connected reason that they've passed or something like that, you can potentially not be a veteran and use it in that sense. There's also assumability options with it that a non-veteran could potentially use it for, but that's a little bit more of a deep topic. So yeah, that's
which we will be doing a podcast about after this. So check that one out too, about assumable loan.
For sure. Yeah. So basically that's your big thing is the government's insuring it, and it's specifically for veterans in most cases.
And then there's another term, we'd like to define these for you, a certificate of eligibility. So tell everybody what that is and why it's important and how to get it or what to do.
So the certificate of eligibility, or the COE, is the document that allows you to actually know you're allowed to get a VA loan. Now, that doesn't mean that you're qualified for a VA loan specifically, but it means that at least the VA says that you can use their backing to get one. And it serves several purposes. The first thing is it's going to tell us, what kind of separation you have from the military, which impacts the VA loan. It's also going to let us know if you've got any military, like service-connected disability. If you do, VA loans have a funding fee up front. It's variable, so I won't go into that. It changes based on down payment and usage type and stuff like that. But you don't have a funding fee if you've got a service-connected disability. It will also let us know if you've got other VA loans already, how much of your entitlement is left to use for a new VA loan if you still maintain a previous residence. One of the popular things veterans and military service members will do is they'll go zero down, buy a house somewhere that they get stationed at, and then they'll move and buy a new house, but hang on to the old one as an investment property, because there's a pretty regular cadence of people moving in and out of town there that don't want to buy a house, so they've got the opportunity to play landlord from wherever else they're at. I've known a lot of veterans that have turned that into like a second retirement portfolio when they get to their military retirement.
Well, and that's one of the big myths is that you can only use a VA loan one time. So can you go just a little bit deeper on how often they can use it?
Yeah. So you can use it. There's really no limit to the number of VA loans you can have. There is a limit, however, to how many you can do before you wind up putting money down. The VA loan is insuring you up to 25% of the loan to value. So from an exposure standpoint on the lender side, it's like we're at 75% loan to value, like you put 25% down. That's really what they're doing there. But basically, you look at the jumbo limit for any given county. And what the jumbo limit is it's where things go over the conforming limit and you get into typically bigger homes. Obviously, they're more expensive homes anyway. Maybe lots of land, little home, whatever. For easy math, like the jumbo limit for every county is going to be different. So every county in America, I don't know all those. So we'll just say $1 million even dollars. That's not one of the limits, but so that I could do the head math. Let's say that you've got $1 million limit. Well, they're going to base it on the $250,000, the $25,000 down there. So in effect, in a county with $1 million limit, you could have 4 $250,000 houses and put zero down on them. But as soon as you go over that, that's where you start having to put down payment down to compensate for the difference there. It's something there's online calculators for. I'll say that. Like if I try to give you the equation here, best of luck. But basically, I've helped a lot of people that own 3 or 4 even VA insured loans.
So if they go over that $1 million, are they still able to potentially use a VA loan? They would just have to have
Correct.
a down payment.
And that same would apply if you own one house, but the house was like $1.2 million or something like that. Then you're paying 25% of the over, the 200 over.
Any downsides or trade-offs with VA loan?
The funding fee can be sometimes. It's it's got a stigma, which I'm going to get on a soapbox in a second about that. But the funding fee can be sometimes. For example, it's currently 3.3%. If you do a cash out refinance and do a VA loan and you don't have a service connected disability. I helped a veteran a couple years back where they were really heavily considering doing that. And whenever I showed them that, yes, the rate's higher on a conventional loan, but you don't pay 3.3% extra just to do this thing, it just made more sense for them to go conventional in that situation. Otherwise, it's just kind of, we got to run math and see what makes the most sense. Most of the time, the rate more than compensates for it, but in that specific situation, it did not. Now, the stigma around them is that because you can buy a home, VA doesn't technically have a credit score minimum, and you can buy with 0% down. Now, they do have a credit score minimum for doing that, and you got to have at least a 580 to pull that off. A lot of sellers think that, oh, this is just a weak buyer, that's why they're doing a VA loan. Well, just like me, I've helped dozens and dozens of veterans that had excellent credit and a good debt to income ratio. I could have put a down payment down, but the VA loan mathematically made the most sense for them. The other factor there is there's this misnomer across a lot of real estate agents that if a home it has some questionable things on the health and safety front, that it'll fly all day on conventional, but then VA is just going to be absolutely crazy about it. VA is tighter, obviously. We covered that a minute ago. But going conventional is not an anything goes situation. Like I've got a teammate right now fighting the good fight on one where there's a room where the drop ceiling's caving in. Well, if you're standing under a drop ceiling that's caving in, that's probably a significant problem for your head if it decides to finish, right? That's a conventional loan right now that's not flying on. They're sorting through how to get that worked out with the sellers. But, overall, like I personally would say, don't discredit a deal because it's a VA offer versus a conventional offer. For all you know, that veteran is stronger suited to buy your house than the conventional offer is potentially. It's also, in some sense, a little bit easier to qualify for a VA loan to begin with. They don't run off of a debt to income ratio. The debt to income ratio is, your monthly gross debts divided by your monthly gross income. Gross debt sounds stupid, but anyway. So for example, if you got $5,000 in payments, including your house, you make $10,000 a month. You're at a 50% DTI. Well, you also are if you make $2,500 and got $1,500 or $1,250 a month. The thing is, VA runs off residual income, not debt to income ratio most of the time. It makes more sense because your residual income is how much money you've got left over. If you've got $10,000 at 50%, that's your limit, conventionally speaking. But you got $5,000 left over to live on. On the VA, they care about the fact you got $5,000 left to live on, not the percentage that you've got there. So a lot of the times you can qualify for more if you're a decent income earner because, it's a lot easier to eat off that extra $5,000 than it would be the $1,250.
Yeah, so I do quite a bit of work in Clarksville, which obviously there's a lot of military people that come and go there on a regular basis. So VA loans there are obviously way more common, I would say, than any other section of Middle Tennessee, just in general. But there are a lot of myths out there that a lot of sellers don't think that a VA loan is as good as a conventional loan. So it is something that we have to battle on the real estate side when it comes to, making sure that I'm helping to explain certain things to listing agents if they're not as in the know. And then also Matt is always helpful to talk to listing agents, without sharing too much, to help listing agents feel a little bit better when they present that offer to the seller. If it is a situation where a seller feels like, a VA loan is not, quote, as good as a conventional loan when it comes to not running into problems and issues and, perhaps not having it close. Some other myths out there are VA loans take longer to close than other loans. Thoughts on that?
The only thing that takes longer on a VA loan is the appraisal. The rest of it's exactly the same process as any other loan. On the appraisal, for whatever reason, in their infinite wisdom, the VAs decided that you're not allowed to pay a rush fee. So they allow up to 10 business days. I'll say that. It's interesting because it really just depends on the straw that you draw for the appraiser. Because like my personal home, whenever I bought it, the appraiser was done within 5 days. That put us in position to close early. Of course, it'd be weird if the lender couldn't close his own house early. So there's that. But on the other hand, I've got plenty of clients where they take all 10 of their sweet days and wait till the end of the 10th day to mail the thing or email the thing back to us. They also, on the appraisal front, kind of leave the lender in the dark a little bit more. Most of the other appraisals we're getting periodic updates about, it's assigned, it's scheduled, etc. We expect to send it back to you this day. On the VA front, unless a listing agent tells me that the appraiser is scheduled up, I don't know they've scheduled up. And I just magically get an appraisal one day. So that's the one piece of the puzzle where a VA loan might be a little bit slower to close. But you're still not going over your 30-day window there that most contracts are. And I've definitely closed VA loans in, just over 2 weeks because of the appraisal. The other factor too is I'm not going to name names, but there's several lenders online that I would say prey on veterans by their marketing, making it seem an awful lot until you get to the very bottom of the fine print 10 miles deep on the scroll of their webpage that they are the VA in some way or that they're directly associated. Any VA lender can do a VA loan. It's not something that, there's the one lender that does VA or anything like that. Like matter of fact, when I do a VA loan, I'm shopping it across like 10 different lenders myself for you, to figure out who's got the better pricing for you that day. The other thing too is if you've not submitted your certificate of eligibility to the lender, you're not pre-approved. Now we can obtain it a lot of the time, but I've had multiple situations over the years where a veteran would go to one of these places that was the VA and get pre-approved without a certificate of eligibility, and due to circumstances in their military career, they weren't actually eligible for a VA loan, and nobody knew it until they were in contract and having too much fun for their own good and up a creek, essentially. The big thing there to watch out for is to do a VA loan, you got to have an honorable discharge. And then also to do a VA loan, like if in my case, I was Air National Guard. So, for those that hadn't heard of that before, part-time Air Force. You have to have 90 consecutive days of active duty service that's not training time, or 6 years of good years in the Guard or reserves. And a good year really just means, I actually called the VA myself one time just to check on it for myself, because I'm like, how many days is considered a good year? The man literally told me it's considered a good year if at least one day that year you walked in the office, shook the commander's hand, and left. Like, that's all you got to have to call it a good year. So, there you go. But, for some people, like maybe they got hurt in training or something. They never made it to that point where they hit the 90-day window, or they never got deployed to hit, that window or anything like that. And unfortunately, they're just not eligible for a VA loan, and we have to look elsewhere product-wise for them.
And then another issue that sometimes comes up is the thought that VA appraisals come in low compared to appraisers on other types of loans.
That sounds like something that's completely made up. I've never personally seen that be the case. I mean, an appraisal is an appraisal. They're using the same comps either way. I think that's probably...
Are there only certain appraisers that can do VA
There are,
loans?
yeah. There are specific ones that are VA certified, essentially, and that is one thing with the VA appraisals we order is straight through the VA. Like, every lender goes to the same spot to order a VA appraisal, and no lender gets to choose who gets it after that. In my experience, most appraisers, at least in the local area here, are VA certified, because why would they not have that extra opportunity for income on their end? But I've not seen that the value mattered between a VA or a conventional or FHA or anything like that. That if they're doing the appraisal right, they're using the same comps no matter what.
Yeah, I had one experience, well, maybe two experiences with that. I think the issue just is not every appraiser does VA loans. And so you may or may not always get the best appraiser assigned to that one. So I would, that's just because the pool is smaller, I would say. So that's the only thing that I've personally seen as far as that part.
Yeah, I will say the one piece that's been interesting to me a few times has been because you can't select the appraiser on our end. Like we select from a pool. Like we're not just going and handpicking an appraiser. You can't do that. But because you've got no choice at all in the VA, I've had a lot of situations where they may take an appraiser from Nashville and go drop him or her into rural Tennessee somewhere that they probably aren't super familiar with. Or in one instance, I had one from Huntsville come up to southern middle Tennessee. They're not even in the same state. Obviously, she was licensed in the same state in Tennessee, but that could cause some potential just lack of familiarity in the market to change things. But that's the only negative I'd say on that front.
Well, and I would say that's a risk that you run, especially when the market is somewhat busy with bigger name companies out there that are not truly local. You guys can fill in the blanks because you're probably pretty smart. I've seen them, same thing. I've seen them bring in people from Kentucky and other states, especially when we did have all those multiple offers. They were bringing in appraisers from all over the place, and they knew nothing about Tennessee. So, as we hopefully are educating you as we go, there are pros and cons to using certain companies out there. And that could be one of them because that does happen. One of them actually was not able to refinance one of my customers because he has a unique house just outside of Murfreesboro. And one of his friends talked him into using one of those big companies. And I'm like, no, you need to go back to the lender that helped you the first time. They already have an appraisal on file, right? So they're just going to figure out how much the market has gone up, which at that point was probably, well, it was a huge percentage. They would have been able to refinance him, pretty quickly. But instead, he listened to his friend, which we also advise against. And they sent an appraiser out that didn't have a clue as to what to do with his house and thought it had only gone up like 10%, not like 50%, which it had. And, he did not get his refi. So then he had to ultimately, use someone local. So anyway, note to self about that. Anything else that we need to touch on that anybody thinking about using a VA loan should know?
No, I think the big thing is what was it? Steve Irwin back in the day said that alligators were just frogs with teeth. They're misunderstood. Now, I still ain't trying to get close to an alligator for the record. Been to Florida a lot lately.
Or frogs with teeth.
Yeah, I don't want to see one of those either. I'm going to have nightmares. Anyway, VA loans are kind of the same thing. Like they're just misunderstood. They're not what you think they are. Like they're not some terrifying, if you're a veteran, pretty much every veteran's gung ho use their VA loan. I'm talking more so to if you're trying to sell a house, to buy a house crowd right now, or just sell a house in general. If the math is the same between the offers, the VA loan could very well be the stronger offer in a lot of situations. You never really know until the deal closes, though. I mean, the lender can't call you and tell you how great their ratios are or how great their credit is. That'd be unethical. But, at the end of the day, I would not use that as a disqualifier.
Perfect. Well, hopefully you've gotten from this that VA loans can be one of the smartest ways to buy a home, but only if you understand how they work and if you have the right team around you. So if you have questions about eligibility for VA loans, appraisal rules, or how to make a competitive offer using a VA loan, reach out to Matt or I to get started. And thanks again for joining the Smart Moves podcast, where we try to make things simple for you to help you make the smartest decisions that you possibly can when it comes to buying, selling, real estate, financing, and sometimes just life questions of things going on here in Middle Tennessee. We can't wait to see you on the next episode.